Better than Tushar Bora, the co-founder and fund manager at MK Ventures, joining in on the show right now to talk about what his observations for the pharma universe are. Tushar, hi, good afternoon. Great to have you today on ET Now. Tushar, the pharma sector is often avoided by a large section. Wanted to understand what your thoughts are on pharma companies, considering you too have not liked them for many years now, but now you're finding opportunities. Where is it that you see value?
Hi, thanks Aisha for the opportunity. Good afternoon to everyone. A slight correction. You can't look at pharma as a single sector. It's a sort of a mosaic of many different opportunities, many different sub-segments. A lot of times people, take pharma to be more of a cyclical sector. It is far from it, actually. There's always a bull run in some part of or some segment of pharma that's happening. It is what segment you like at a particular point and where the opportunity is, that's more important. So yes, technically, theoretically, I have been not very bullish on select large cap pharma names, specifically names driven by US generics business for a long time now. Incrementally, some of those are now turning positive, where the investments of the last several years are starting to show fruit. So I was just going through a number, just one interesting metric. I think between acquisitions and investments in R&D, at least $10 billion have been invested by the leading Indian pharma generic companies for the US business alone over the last 10 years. So that's a lot of money that has been invested and which at some point will start to bear returns. But typically investments in specialty have been front-ended. They take 5 to 7 years to mature. And the generics business obviously has been seeing a lot of painful since at least last 5 to 6 years. So I was not very bullish on that space all this while. Last year and a half, I've turned selectively bullish on few of the names there. But yes, within pharma, a lot of other opportunities have performed well in the last few years and probably will continue to do so.
But Tushar, tell me, the big problem clearly seems to be pricing pressure in the US. Are new complex specialty launches the only way to look at pharmaceutical sector now?
Uh, so let me qualify again. Pharma is not just about US generics. That is one part. Yes, it's an important part. In the base business for most of these companies, it's a large contributor. But if you see last 6, 7 years, US generics business has not been contributing incrementally to earnings for most of the large formulators. But there are a lot of other businesses that have done very well. The domestic business has been fantastic for, you name any of the large companies, Sun, Lupin, DRL. The domestic business has been very good. Uh, uh, a lot of other MNC listed names have performed well. API and CRAMS companies have shown very good results, and some of those companies have done well also in markets. So I would say, let's take a step back on the US generics piece. This was essentially a race of, fastest fingers first. It's like you're trying to enter a shrinking market before your competitors can and extract whatever value you can from that business. Because the generic products, once commoditized, there's not much value left, right? So you're looking at uh, first to files, para trying to get whatever you can before it becomes a commoditized product. In that sense, and with most countries now focusing on trying to reduce the expenditure on pharma, even as the overall healthcare priority continues to go up. So clearly, we can't expect generics business today to do perform the same way it used to at peak. Some of those earnings were clearly unsustainable. A large company, let's say having $2 billion base business, 10% price erosion means $200 million gone for the next year. To recoup that, you need $200 million of fresh business in the first place. And then we talk about growth. So that's another contributor. As you get bigger, there is clearly a challenge to be able to fill in the pipe again. Also, the issue was compounded by regulatory troubles for most of these players. And parallelly, the investments on specialty side took priority. So I think going forward, to look at generics, we should look at it where the companies are incrementally invested. There will be pockets amongst these companies which will do really well from here also. And generally for the smaller companies which have recently entered US, some of those companies still have room for growth. But for the larger companies, I think the growth clearly will be from specialty, not from the US generics business.
So that's a change that's taking place according to you, where you're saying don't focus so much on the US generic business, the pricing pressure over there. Look more for specialty, which will, of course, then be long term because it takes a lot of time to develop those molecules, get all the approvals, and hit the market. But Tushar, the other point to ask is, for the India branded business, for a lot of pharma companies, would you agree it is cheaply valued, and therefore, is there an opportunity there?
So, my preferred investment style is to look for an optionality. That optionality either has to be in the business, something that can positively surprise on the earnings front over obviously a medium to long term period, or that optionality also needs to play out in the price, where the business is clearly, undervalued. I don't think domestic Indian pharma is undervalued. But I do think that there is a clear sustainability to the earnings. India is give or take about a $20 billion market today, domestic formulation, domestic business. I think there's definitely still a lot of penetration that needs to be done. A lot of the products are business is shifting to chronic as and India being a youth heavy demography, as people mature, as the overall age profile shifts, we'll see more and more lifestyle oriented diseases, and which means there's a lot of scope for chronic therapies to grow. I think overall, as in India, domestic market, early teens, mid teens is definitely a sustainable growth trajectory, and the leaders probably could grow much higher. But on the valuations front, possibly some of these companies are fairly valued. When you look at the near-term perspective, what you can really expect from your investment is only mirroring the earnings CAGR on these businesses. But the important thing to remember is that in downturns or in when markets fall, some of these businesses do temporarily become very attractive and even cheap.